why is it called real estate? How is it defined?
Real estate, how is it defined? Um, I would be I would say it has something to do with it being a tangible asset, which would make it the real part about it. And then an estate would just be like a plot of land or an asset.
So you're close. So the word real derived from the Latin meaning existing, actual, or genuine. So that was spot on. The word estate, English translation of an old French word estat, meaning status.
Okay,
So now the estate word we use to describe owned property consisting of houses or land.
interesting.
Yeah, right. So
Welcome to MVP Real Estate Podcast, Season 4, Episode 6. We have Stephen Andrews here, uh, multiple decades in real estate, out of North Carolina, has built quite a portfolio of homes just within his surrounding areas. So, talking about competition on the podcast, talking about his new book that he put out that he shares throughout the podcast. But towards the end, he kind of gives like his big takeaway of the book. And then at the end, so stay tuned, he does tell you how you can enter in. There's multiple giveaways for $1,000 and there's one grand one for 500,000. So we'll put all the links in the show notes. So you can buy the book, you can buy some merchandise, you can get entered in to win some of those giveaways. But let's bring them on. Well, thank you, Stephen, for being here. Thanks for giving us the time. Um, I'm gonna let you go ahead and do like a quick literal, I always call it an elevator speech, 30 seconds to a minute of your background, just so our audience get a feel of like who you are and where you came from.
Absolutely. Thank you so much for having me, Dan and Marcus. Glad to be here. So, yeah, I'm Stephen Andrews, been in this great business called real estate for a decade. But my journey started certainly more than a decade ago. I took a real estate class my senior year at High Point University and just fell in love with real estate. And my adjunct professor there, we had a simulation and he owned apartments in Chicago at the time, and he was wanting to expand his business down into North Carolina. And so the whole project was, hey, buy an apartment complex, make it profitable in the first year. That was the simulation. If you did that, you got a good grade. If you didn't, then you didn't get a good grade. And I just fell in love with the different aspects of what real estate really is. And so fast forward a couple of years, because I was too scared to get into real estate, right? I thought you had to have money and I thought you had to be well connected, and your brain plays tricks on you because starting something new, you got to get out of your comfort zone. And so I was just too afraid, and I was talking to my parents about wanting to get into real estate. And my dad knew a guy named Joel here in North Carolina, and he had been in this business 30 years. And so he said, I don't know if he can help you or not, but here's his number, give him a call. And it was just a match made in heaven. We're still friends to this day, still my mentor. I bought a ton of property from him because he was wanting to downsize and spend more time with his family. I was wanting to certainly grow. And fast forward a decade, about 300 units in, flip houses, loan money. Now I've wrote a best-selling book, The New American Dream, and I've launched a consulting business to help people get into this thing called real estate as well. So it's just been a full 360, and it's been great.
That's awesome. In that project that you had at High Point with the simulation, that is super cool. I remember in college because I one of my majors was sport management, and we had to basically host the Olympics. We had to pick a city, pick where the resources were, travel amenities, all that stuff. Super cool. It's
Yep.
fun in a simulation, but like you said, when it's real life, it's a little difficult. So my first question was, in that simulation, what are the biggest differences you found from real life investing as opposed to that simulated class investing?
Yeah, for me, a lot of the principles are the same, right? But a simulation's fake.
Yeah,
It's not really your money, or it's not money that you're borrowing. And in real life, it's you are borrowing the money, or you're using your own money, so it becomes a lot more real. And so, simulation, you're fine with making maybe a few more risks or a few more mistakes because, hey, nobody's going to lose any money. But certainly you get into the real life, and you start thinking about, okay, what about these mistakes, what about losing money? It becomes a lot more real. And
right.
so you're a little bit more cautious or a little bit more conservative in real life compared to what a simulation would have been.
Yeah. And I know the fact of raising money was your first one when you got into the real life um side of things. Do you remember the simulation and how you raised money in that simulation?
Yeah, so for the simulation, it was more based on for the money aspect. They already kind of gave you a budget,
Okay.
so it was more about finding the property and making it profitable. And you've physically had to find a property in Chicago. I mean, that was a part of the simulation. You had to find one that was for sale and plug in the numbers. But I got a pretty cool story on how I got started in real life. So I was $75,000 in student loan debt. Well, majority of it was student loan, and I made a great investment as a 22-year-old and bought a brand new car too. Um, just wonderful investment. I highly recommend anybody 22 to do not go buy a new car. And I only made $45,000 a year, so I didn't have a lot of money left over at the end of the day. And so when I was talking to Joel, I said, Joel, how do I get in this? Like, I feel like you got to have money. I feel like you got to be well connected. He was like, you don't need either one of them, right? He said, figure out a way to get your down payment. And at that time, the banks were allowing just 15% down. And so he said, just whatever it takes, get your hands on the money. And I thought about it at the time. I had a credit card that allowed you to take a cash advance off that credit card. And it was only 7% interest, so much different than what it is today.
Yeah.
Um, but I pulled money off a credit card, and that was my down payment. And so,
Wow.
I tell people to this day, I don't have a dime of my own money tied up in it because I borrowed my down payment to buy the property. I borrowed the money against a credit card to do the repairs. And then when I refinanced it, I pulled that money back out, paid that stuff off, and I rolled money to the next property. And
Yeah.
so from the very beginning, I use borrowed money, and it's easier now than ever to find places to borrow that money at. Now,
Yes.
your rental markets might be a little bit tougher to get into, right? Depending on the prices and interest rates and that sort of thing.
Yeah.
But if you want to get in this business, you can certainly get into it with little to no money.
Yeah. And once you get comfortable mindset wise of borrowing other people's money, it, the gates open. And it seems foreign when you're not in real estate that people want to like give out money, but people want to put money out. The people that have the money need to place it. They're playing the tax game at that point, and they want to be able to lend it out. So yeah, you just have to get over that mental hurdle of like, oh, I'm borrowing money, that fear factor of like, oh, I'm borrowing, it's debt, but it's not a new car debt. It's something that's going to make you money debt. So difference between
That's
good and
right.
bad debt.
Absolutely. And I think about what Joel told me about bankers or institutions that lend money. He said, when you go in and you talk to these people, he said, everybody's has a little bit of a fear about a banker for whatever reason. I don't know if it's because they're in a suit and they're all buttoned up and whatever it is, but he said it's really a two-way interview. He said you're interviewing them as much as they're interviewing you. They're
Yeah.
interviewing you based on like, are you going to be a good customer for the bank? But you're also interviewing them because do you want to work with this person?
Right.
And he said, when you have a mindset that the banker's job or the financial institution's job is to lend money, if they do not lend money, they get fired,
Mm-hmm.
right? But if they also lend money and you don't pay them, they also get fired. So, like, it's a
Yeah.
catch 22 there that you both have to be good customers to each other. But if you get over that hurdle, it's a game changer to your point. I mean, it
Yeah.
really is. And that's certainly what's catapulted me to the success I've had today. And certainly a complete mindset change, right? Life's all about perspective. 10 years ago, I had a different perspective of what bankers were and how you get money and that sort of thing. And certainly have a much different perspective today.
Yeah. And that first deal is, at least from my perspective, the hardest one because you're trying to get that lender to trust that you are going to do good and you have no track record to do it. So that first connection, that first lending is important. So if you can get into that mindset of like, I'm interviewing you just like you're interviewing me, you're comfortable with that fact. If you can get it to go, then the floodgates will open. Because like you said, you can refinance. And I was going to ask you if we could dive into that first deal, because that's always like the tricky one for people getting in. So
Absolutely.
awesome. I don't know if you remember, like, you don't need to know dollar amounts off the top of your head, but just ballparky. So we already talked about down payment came from a credit card. I don't know what interest rate the credit card was at that point, but obviously there's an interest rate just like any other loan you'd have. And then the mortgage part was taken over by the financial institution, the bank. So do you know what you took out with your credit card and what the mortgage rate was?
Yeah, so kind of my whole strategy has always been, for one, how to identify a property, buy the worst house on the block, right?
Yep. I
So,
love that.
for me, if you buy the best house on the block, there is no upside. You're paying retail value for it. You're not bettering your community. I mean, it's already the best on the block, and so you get a much better deal if you buy the worst house on the block. And that's what I did. I bought two houses side by side, and they were about $35,000 a piece. Had to put down 15%, of that. So you're talking about 7,000 a property having to put down, something like that. And so what I was able to do is take that money off the credit card and bought the worst houses on the block. I got them in my possession. I was able to go in and fix them up. And these properties just had cosmetic issues, so some of them had holes in the wall, maybe a broken window, some siding messed up, some landscaping that needed to be done. But what people don't realize is if you can look past those things, you can get a heck of a deal, even
Yep.
to this day, because there are a lot of people that just says, oh, most people say, oh, that house just needs to be demoed. But it doesn't need to be demoed. It just needs a little love, right?
Yeah.
It doesn't take that much to actually do some of this cosmetic stuff. Now, if it's structural stuff, stay away from it, especially if it's your first deal. But for me, that's what I did. And so then I pulled another 5,000, 6,000 off to go into both properties, and I fixed them up. And then I was able to refinance them. And so now the value had doubled, because there again, you have to keep in mind an appraiser is also a human being. So they can't look past all the small things that are wrong. So now when they come back and they appraise it, well, now all those small things aren't there anymore. They've been fixed. So it's, the value is higher. And then I was able to refinance it. I didn't even pull out 85% of it. I pulled out less. So I'd have great equity in the property, but I pulled out enough to pay the credit card off, to pay the down payment, pay the repairs off, and had a little bit of money left over to roll to the next one, where then
Yeah.
I don't have to borrow as much off that credit card for the next go around, because I already have a little bit of money working. And so not only, the rents were a lot cheaper when I bought it, I was able to raise rents. And so it just made so much sense. And those same properties today, I bought them for mid 30s. Those same properties today are worth close to 200,000
Wow.
in 10 years. The rents have tripled in 10 years.
Yeah.
And so, I tell people, and I didn't know this then either. You don't buy a property for today, you buy a property 10, 15 years from now.
Yep.
And it's hard for people to understand that properties actually go up in value. So, yeah, you're buying a property, can it cash flow today? But you want to make sure it's going to go up in value. So if you buy the best house on the block, it might not go up in value. I mean, man,
Yeah.
it might already be peaked out. It might take it a lot longer to go up compared to the worst house on the block. And so just so fascinating.
Yeah. Exactly. And did you start with single family homes as your first investment, or did you jump right into multifamily?
So started with single family, and then I got into multifamily, some duplexes, triplexes, quadplexes, fiveplexes, small little apartments, 6, 7, 8 units, max is 10. And that's kind of where I've stayed, kind of 10 units or less over my entire career. And I've stayed in residential because, for me, it's everybody always has to have a place to live, right?
Right.
So I wanted to venture into commercial. But then when COVID hit and all these commercial people weren't getting paid anymore, it really starts to get you to think, okay, well, maybe I'm doing just fine in this residential landscape and not getting commercial.
Yeah, I had a benefit of working for a guy who did some commercial properties early on, and I knew pretty quick that that was not the feel of what I was going for. Um, with the rents being high and all that, it didn't feel recession proof to me. And then
Right.
obviously COVID hit years later, and the storefronts are just evaporating. So glad I didn't go that route. So yeah, we've been
That's right.
sticking with residential just like you.
Yeah. And I tell people, I feel like residential is recession proof, right? Now, don't get me wrong, during COVID, when the government put on there, you couldn't file eviction for non-payment of rent, that's the first time that's ever happened in the history of this country, right? But
Yeah.
outside of that, there was programs to help people. We were very blessed and fortunate that, vast majority of our tenants paid, but the ones that didn't, we were able to get them help. And so we didn't feel that effect nearly as much. Now it took a ton more work because you had to kind of hold their hand a little bit, because they're the ones that actually had to file for the assistance. We couldn't do it for them. And so it was a little bit more difficult, but you're right. I mean, everybody's got to have a place to live,
Right.
and so, if you stay competitive and provide a good product and have a decent rent, you're all the time going to be able to fill those up.
Yeah. And is this the kind of investment strategy you talk about in your book that I see in the background? Do you talk about your progression in investing? Is that like I guess a step-by-step plan, or is it more of a mindset book for people that are trying to get into real estate?
So it's a little bit of both. So like the book's kind of set up first things first, how to create an LLC, how you do those things, to how you find a good deal, the right deal, financing, authentic relationships, to becoming familiar with the locals, because everybody forgets about the municipalities or the cities. You got to have good relationships with them because most of them tell you what you can and can't do, right? Especially the zoning piece of it. To maintenance and processes, to the rental process. And then the last chapter, I talk about when's enough, right? It's this, competition you have in your brain of what you think success is and that sort of thing. But it's really, I base my book, I read a book when I first got started, Building Wealth by Russell Whitney. It was, originally released in the 90s, re-released in the 2000s. And Joel, my mentor, he told me, hey, you need to read that book before we even talk, like before we get going, and it really had step-by-step on how you get into this business, how you turn around and you put your sweat equity and refinance, how you can really scale it. And so my book has all of that stuff. I wanted to really put in there a lot of what I've learned over the last 10 years, and where somebody could really pick that up and feel good at the end of reading it. Like, what, I have at least the foundation of knowledge that I need to try to get into this business.
Yeah. And you mentioned something, the LLC part of it. So how to start an LLC. This has come up, and I don't know why it's come up with me, but there are some people that are pro putting properties in your LLC, and there are some that are just like, keep it in your personal name. Do you have an opinion on that? What you would suggest?
Yes, I think it always should be in an LLC, and let me explain kind of why. In multiple different LLCs. So I had a guy that's been in the rental business for 40 years. He goes to the lengths that every single one of his properties is in a completely separate LLC, which I don't do that, but he explains on why he does it. He said, if somebody comes after it, they only get a piece of the pie. They don't get the whole pie, right? So the way LLCs protect you, if somebody just say got hurt at one of your properties, well, if the LLC only owns that property, that's the only property they can go after. They can't go after everything else.
Yep.
For me, I have it structured a little bit different. I have an LLC that owns everything.
Mm-hmm.
And then I have a completely separate LLC that manages everything. And so, if a tenant ever got hurt, they can't go after the LLC that owns the properties. They have to go after the rental management company that manages the properties. And so, well, the management company doesn't own anything, right? I mean, my management company is 100% virtual. I mean, there's a few things you could potentially, I guess, get, but there's no property that you're going to be able to get. And certainly you have insurance in place, umbrella policy, general liability policy that can protect you. But I wanted that because if you own something in your personal name and somebody gets hurt on that property, they can come after you personally. So they can come after your house, your car, anything you own personally. And so I think it is so important to be protected. It's pennies on the dollar what you have to spend to protect yourself. And so my properties are in an LLC. I have a rental management company that manages a completely different LLC. And then I even take a step further. Like my personal house is in a trust, so there again, somebody can come after me personally. All they're going to get is my car. Like they're not getting a single other asset because I don't own any other assets in my personal name. And so I think it's just so important to protect yourself, because I'm a firm believer that I don't think one mistake, you should lose everything. Right. Like it's just, you work, you could work 30 years and you make one mistake and you lose it all. Like to me, that just doesn't make any sense. And so there's just so many different ways that you can protect yourself and protect it. Don't get me wrong. It's a few more steps, a few more hurdles, a little bit more money, but the money you could save if somebody actually took everything from you is just pennies on the dollar, and it helps you sleep better at night knowing that other people can't touch, your hard-earned work.
Yeah. And I'm on the same plane as you. We've got our renovations LLC, we've got a rental LLC. We don't have it parceled out where every house has its own, but we usually group like 3 houses in an LLC. And yeah, it's a nuisance when we try to refinance and you have to like quit claim it to your personal name just to get the closing done and then you quit claim it back. So yeah, you could be talking about $500 or $200 to start the LLC. But if I'm going to lean on either $500 of a fee or thousands and thousands of dollars of like damages, I'd pay the $500 just to do it that way. And yeah, we have to sign a couple more sheets of paper, but it makes everything safer. So
That's right.
I'm glad that's your philosophy on it.
Absolutely. And then, I have a completely different LLC for the company that I loan money with. And then I have a completely different LLC for where I flip houses. Cause you got to keep in mind, sometimes people, I've never had this happen to me, but I know people that have flipped houses. People turn around and say, oh, they misrepresented the house, and they turn around and sue them. Well, if you're flipping houses in an LLC that owns rental property that might be paid for, well,
Yep.
and you lose that, they can take some of that. And so you just want to,
Yep.
I just think, don't get me wrong, it's more money, a little bit more money compared to what you could lose. And it's just not worth it. Like it's so worth like having that peace of mind, knowing that you're protected.
Yeah, it's a little bit of insurance, which everybody has, and you ask them why they have insurance, and you don't use it because you don't pay because you want it. You pay because when you need it, it's there, and that's what the LLC is for me in my mindset. And then you also talked about networking, which is huge. Obviously, you need to network with sellers, you need to network with lenders. Where did you find your niche in networking, or where did you kind of like attack when you started? And how has that progressed now that you're in it? You've been in it for 12 plus years. Like, how has that developed?
Yeah, I started with my mentor, so, if you find a mentor that's been in this business for any length of time, they're going to have a good network themselves. And so I was blessed for Joel to introduce me to people that he's known for 20, 30 years, whether it's bankers, whether it's realtors, whether it's other investors. And so, and then it just kind of dominoes from there, right? So, if you get introduced to 5 people and then those 5 people introduce you to 5 people and then those 5 people introduce you to 5 more, your network just continues to grow. And, for me, I leaned on Joel, but then I leaned on bankers. I leaned on people, other investors that had been in this business for a while, and then realtors as well. I told any and everybody that would listen, like, hey, I'm looking to get into this rental business. And so, of anything, whether it's on the market or off the market, give me a call. I might be in the market to buy it. Yep. And that has just materialized over time where I get 5 calls a week. Hey, do you want to buy this property? And, sometimes it's a yes and sometimes it's a no, but, I always pass them on to someone else. Like, hey, you know what? I'm not looking right now for a property, but you know what? This person is. Give them a call. And so it's just, real estate's it's an interesting thing. It's everybody wants to be successful at it, right? But nobody pulls against each other. It's kind of a fraternity of men and women that really want other people to be successful, and I tell people, there's plenty of real estate out there, so like you don't necessarily have competition in real estate, right? Not unless you're just bidding against each other on the same property, but everybody has to have a place to live, and there's not enough places for people to live, so I mean, the supply and demand there is just, it's very high. But, I would try to talk to as many people as possible. I'd look on Craigslist, like, hey, is somebody looking to buy something on Facebook Marketplace? I'd look on MLS. Sometimes, if you're looking at, networking or finding properties, ride down neighborhoods, find the worst house on the block, look the person up, call them.
Yep.
I have found properties that way before. I've actually bought properties that are condemned, and most people are just so afraid of condemned properties, but I have a good relationship with the cities in which I have properties in. And so they have a condemned list. And what people don't realize is, and I didn't know this until I really started doing the research, but cities can condemn properties for a stopped up sewer line. So it could be a perfect property, but it could be on a condemned list because for whatever reason, the sewer line stopped up. And that's actually happened in some of the cities in which I own property. And so, there could be some decent properties on a condemned list that they're condemned for something very minor, like they get a plumber out there and unstop the sewer line. I mean, it's just that simple.
Yeah.
And so you can find even good deals based on that, because they have the people's, they've kind of done the work for you. They found the worst house on the block because it's condemned. And most condemned houses don't have structural issues. It's more cosmetic stuff. They have the owner's information. They got a phone number. They got an address. I mean, they just hand it to you. I mean, it's public knowledge. And so, hey, here's our condemned list. They've done all the work for you. All you got to do is call them.
That's awesome.
So, most people don't think about that. And so, but that's how you can still find some deals to this day.
Yeah. I wish we had a condemned list. I think the closest thing we have is a probate listing from the county, and that's about it.
Yeah.
But yeah, it's funny, like the networking compounds on itself. You meet one person, that person knows 3 people, those 3 people know 3 more people, and it keeps rolling. So like when we started, we were hunting for deals. I was doing, most viewers are familiar with Bigger Pockets, and they were promoting what was it called? Driving for dollars, but what was the software system?
Deal Machine.
Where all I have to do is take a picture of the house, it skip traces the tax record and sends out a mailer to the homeowner. And that's how we
was it Deal Machine?
Deal Machine, yes, thank you. That's how we found 2 of our first 3 properties was on that. Then the next one was an auction. So I got the ability to go to an auction because I networked and found somebody that had capital that could actually put up the money up front. But yeah, even we were working outside sales and I was driving constantly. And I'm like, what can I do? So I would take a different route to every different location just to see those worst houses on the blocks. I'd take pictures of them. And you get some calls, you get some people that are no, you get some people that are insulted. You're going to run into that. But more often than not, you're going to find a good, at least a warm lead. So
even like you said,
the fear of that.
The networking thing, we had the city inspector would call Marcus and say, hey, there's a property that I have to inspect. If we don't have someone to buy this, the city's going to take it over, or like we're going to condemn it. So like, hey, get a hold of this person and see what you can work out with them. So like, even those simple interactions can lead to a potentially good opportunity. So.
Yeah. And as you get into real estate, for all the viewers, inspectors are not very like forthcoming with leads. So it was shocking when he kept calling. He's like, hey, I'm going to look at this one, or call on this one. It's super cool. And you get leads from people that you wouldn't expect. I had a friend that I was a few years under him in high school, but we met years later, and he just gave me a call a couple weeks ago and was like, hey, we got this situation with this house. Can you help us out with some ideas? And it's such a weird networking thing that I never thought when I was managing a bar in Milwaukee that it would lead to what I'm doing in my career. It's very, very cool.
Absolutely. And to piggyback on your story about the inspector, I've had a very similar story. There's an inspector here in the town in which I live. And sometimes he'll call me and he'll say, Stephen, do you want to buy this property? He said, I'm tired of dealing with this owner. He said, the owner won't fix anything. You don't have any money to fix it. So I told the owner, like, hey, I know a guy that will probably buy it. Y'all need to link up. Like, I'm tired of dealing with this, and so, sometimes leads are based on frustration too.
Yeah.
That like people are just ready for a solution. And when people are just ready for a solution, that's when you get the best deal, right? Yep. They're just tired of dealing with it. They're just frustrated. They're just like, get this out of here. And so lean into those. I highly recommend don't ever tune somebody out about a connection, because you just never know when you might need that person, when they might need you. I mean, make sure it's mutually beneficial.
Yeah, absolutely. And it comes with time. It does. You can't expect a new investor to come in and run the show and have all the resources, but if you stick with it, you'll have support. Like you were saying, it's a big group, men and women, all trying to do the same thing, but we're not really competing with many other people. And I'll take it back to you, your 22-year-old self when you bought your first property, right? You were 22?
22, 23, 24, something like, it was my early 20s.
It's impressive, either age. Um, did you start local, like in that Chicago market?
Yes, I started
First,
local. Well, so in Chicago was just the simulation for school,
yeah.
but I started locally here in North Carolina.
Okay,
You
and
know,
have
so
you stayed local since then, or have you expanded out?
I've stayed local, so I own property in 4 different counties, and I've clustered all the properties together. And that's one thing that I talk about in the book. That you don't want a bunch of properties necessarily just spread out, right? Like, what if you got to go see them all? I mean, that's a
Yep.
ton of time in between. And so, I tell people it's fine if you're in multiple different states or multiple different counties, but try to cluster them together within that territory. And so,
Yep.
for me, in any of the counties, you can get from the furthest property to the other furthest property in 30, 35 minutes. You can get from one of my properties in one county all the way to the other property in another county in 45 minutes. So really, you get to any of my properties in 45 minutes. And I live in the middle of it all. So I can get to any of them in 20, 25, 30 minutes max. And
Nice.
so it just makes it so much easier when you start thinking about from a business standpoint. If you have to have maintenance teams go, if you have a plumber, electrician, HVAC roofer, if you got one that's 2 hours this way and one's 4 hours that way, that's going to be a lot of money you're spending if you can't find somebody in that area. So I
Yeah.
always try to recommend people cluster them together. Plus, you get a sense of that market. So if you just have one property in every single market, do you really know what fair rent is or what you should really be renting it for? The more you have there, the more sample size you can get on what you might be able to potentially rent it for. And for us, we've seen much higher rents being able to do that because I really know what things are going for.
Yeah. And then just to speak on the competition part, so working in the same market or relatively the same market, same county, um, for multiple decades, and you're still finding deals. You're still running into probably people that you've ran into 20 years ago, still doing it. Um, but there's always going to be houses out there.
That's right. That's right.
So
And the cool thing is, it takes it a step further about, the competition about just finding houses. Now, like I'm on a group text that's probably got 10, 15 different investors in this area. And we share information of like, hey, this is what this tenant just did to me, kind of thing. Hey, be on the lookout. This is what's going on in this neighborhood. Like, hey, I'm evicting someone. They tore my house completely up. They did $10,000 worth of damage. And 9 times out of 10, we're getting one of those calls because, there's only so many, realty management companies in an area. And it's like, well, we know who to stay away from. And so it's just sharing information. It's not a blacklist or anything like that. It's, everybody gets to make their own decision, but it's just sharing open information that like, hey, this is what's going on. So everybody can make an informed decision. So it's almost like we have each other's backs too. As much
yeah,
as we're trying to rent out properties and, like, yeah, we don't work for each other, but it's just that community of great investors, men and women, that really make this so much fun to do.
yeah. And then you see all these investors, these big investors like you and the other people that have written all these books. Uh, that's proof they're just trying to give you the information. They're trying to give you the blueprint to jump in. And making reference back to your book, that's exactly what you're doing. You're sharing your struggles, your successes with that next group of people that are going to come in, or the people that are in it with you right now, just to give them guidance. Because to be honest, if there were more people that were in real estate and doing investing, I think the overall knowledge of real estate would get raised, which would benefit everybody. So I like to share everything. I mean, that's the reason why we're doing this podcast, to share, obviously networking, so people can give you a call and talk to you, information, little nuggets if they're trying to get into it. I'm all about it. I just want more people in it.
Absolutely. And I think kind of what we're seeing, and this is kind of what prompted me to write the book. I had several different realtors and several different investors say, hey, there's just so many new investors. There's so many new realtors, and people need to know what you know. And so I was like, okay, well, let me put pen to paper. Let me see if I can make this work. And because what I'm seeing, I bought so cheap, 10 years ago compared to what stuff's, for sale today. I'm selling a few things just to kind of diverse and have more stuff paid for and that sort of thing. But what I'm seeing is that there is a pretty big number of new investors and pretty big number of realtors that don't know how, the rental property, investment property business really works. And so, I even told people, I said, there's a realtor for you to buy a house you live in, but that same realtor probably isn't going to find you an investment property. It's just like going to a neurosurgeon to do a knee replacement. It doesn't work, right? But they're both doctors, and they both specialize in what they specialize in. I didn't learn this really until probably 3 or 4 years ago, that a realtor is not a one size fits all deal either. Now I'm very blessed. I have a very good investor realtor that's all he specializes in, and he knows the ins and outs. But what I have found out through selling some stuff over the last year, and there's a lot of realtors on the buyer side that are really realtors to find you properties to live in that don't know how investment properties work. And so these realtors are like, well, we want a perfect property. Well, okay, I get everybody wants a perfect property, but this is a rental property, right? Like, so it's not something you're going to live in. You're going to rent it out, and they're like, well, we want, the roof's like 10 years old, and everybody wants a new roof if they're going to live in a property, right? I mean, it's just one of those things now. They're like, well, we want you to put on a new roof, or we want you to discount it where we get a new roof. Like, no, that's not how this is going to work, right? Like, that's not how investment property purchases, acquisitions work. Like, it is priced based on condition. It's priced based on what you can rent it for. Like, you want to do all this other stuff, that's fine, but that's on you. And so a lot of realtors and even new investors don't understand that. And so I wanted to try to provide a product, with the book, and then even my consulting business, Storage Consulting, to help people understand that you're not going to get the same kind of concessions you're going to get if you're buying a house to live in compared to an investment property. Investment properties are priced based on condition, priced on based what you can rent it for. If you want all this other bells and whistles, that's okay, but somebody's not going to discount based on that. And a lot of people do not understand that, and they can't wrap their mind around it. They're like, well, I'm just not going to buy the property. Then I was like, well, you're never going to get into this business if you have that mindset. And so that's one of the things that I've seen people just struggling with over the last couple of years. And that's what I'm trying to help, right? Because that's very frustrating for everybody involved. It's frustrating for the seller, buyer, every realtor. Like, you have to have the right mindset to get into this business too.
Yeah. And with the houses on the market these days, with the prices being high, it's harder to make numbers work. But even the houses I walk through, I always message the realtor, just like you were mentioning. And I'm transparent with them. Like, hey, I'm an investor. My price point would be a little bit lower than asking price. I understand that the market these days, you're probably going to get your asking price for a homeowner. But if something does fall through, keep my number. This is where my numbers are at. This is why. And I just pass it off like that. If it works, it works. If it doesn't, it doesn't. I'm not going to get beat up on the nose. It's just not the right property for me. And you keep looking.
And one thing that I've really seen now, and I don't understand this philosophy either, is that people won't make an offer. Like just say the property's worth 200,000 and they think it should be worth 180, for instance. They won't even make an offer. It's like, when I was getting into this business, I didn't necessarily make offers just to, see what I could get away with, but I made fair offers, and sometimes they were lower and sometimes they were much lower, but that's a starting point, right? Yep. Like, and I'm seeing that more and more, that people are afraid to even make the offer, even if it's less. Yep. Like you see plenty of times where somebody makes an over ask offer and they'll do that. But, I got some of the stuff, we've asked for feedback, like, okay, why aren't you going to make an offer? Well, our offer is a little bit less than yours. Well, then make the offer, right? Mm-hmm. Like, that's a starting point. Like, if you don't make an offer at all, the conversation's dead, right? Yep. And so you don't want the conversation dead if you feel like you can actually get something done. But I'm seeing more and more of that, and it blows my mind a little bit. Like, it's okay. Like, it's almost like people are afraid they're going to offend someone by, if it's 200,000, I'm going to make $180,000 offer. No, make the offer. Because most of the time there's wiggle room there, right? Yep. So make the offer. Let's try to get a deal done.
I think there's a psychology behind it, where the people that would be buying feel like the market's been so hot that they have to offer asking or above just because that's how it's been trending or that's how home prices have been going up. And if like you said, I tell students and even previous jobs, closed mouths don't get fed. So if you don't ask the question, you don't put out the offer, it's always a no, or like you said, the conversation dead is not going anywhere. And who does it hurt? Takes what, 10 minutes to fill out the offer sheet. If it's a legit offer, send it out and see what happens. Like you said, use that as your springboard, start there.
Yeah.
That's right.
And I think a lot of that goes into what people are hearing, because they're always like, okay, this sold for over asking, that sold for over asking. That's one little piece of the pie of real estate.
Mhm.
There are so many other reasons why people sell. Is there medical distress? Is there a loss of family? Are they trying to move? There's so many other reasons of why they could be selling other than price. So there was one, we actually had one of our biggest flips was a on market property. It was on for, I want to say 340, 350. And I called up the agent and I said, hey, we're finishing up a flip. We're trying to get to the next one. I do not mean to be insulting at all. I'm interested in your property because I like doing big rehabs, but my price point is not going to be probably something that's palatable for you. But I was going to throw out an offer. If it's something that the buyer or the sellers want to do, great. If they don't, no harm, no foul. And I ran the numbers. We ended up coming in at like 268 or something like that. And they're like, no, that's great. And I was like, I was blown away that they accepted that one because I was still
20% off,
early on.
nearly
Yeah.
20% off they're asking.
Yep. We put in an offer, had under contract, and then we actually backed out because they had another buyer. But it was on the market for 200. We offered 100, and they accepted it. So you never know what's going to happen. You have to ask the question. You have to ask why they're selling. I would guess 50% of the time, maybe that's just my perspective, it's not price. There's some other factor in their world that is pushing them to sell. So
Yeah.
always ask the question, always, and I don't know why it's not a question they ask, like, why are you selling? They just assume that they want all the money that they can get.
Yeah.
But asking the simple question of why, what is your pain point? And then you try to fix it.
That's
So,
right.
and
I
I'm
want to go
sure
back
you
to your
offer
group
those
text.
solutions in the book. What's that?
Said I want to go back to his group text with not to, I guess, dwell on it too much, but is there an app or a website that you could either create or that's already existing where you could share almost like a Yelp for either landlords or renters?
I feel like
Ooh.
I haven't seen one out there, but I feel like somebody could probably do that and be pretty successful at it.
What, like if it was an independent, like how do they have like I'm going to attribute it back to our old days, Marcus, where we used to have to check in at schools and we would have to go through our company who would submit our personal information through a background check system.
Mhm.
And once we got this ID, we could go into any school and basically more than just our driver's license, it's basically showing this person is on the up and up, their background check is clear. Like, is there some type of system that someone could create if it's not already created with, like I said, yeah, this
Well,
this
we're going to
this
like a
landlord
social
this
credit
landlord
score here.
owns these houses, they don't take care of their properties well, but the rents are low, or this one's difficult to deal with, or this renter was good for the first 5 years and then for whatever reason life happened and that, so like more than just a simple background check, because you can hide that stuff. I mean, people get
Yeah.
around it or they
Kind of like the
circumvent
glass
those.
door of real estate.
Kind of, right.
I remember using that when I was like job searching.
Mm-hmm.
Glass door. But we're coming up on our hour. I wanted to get two things. Was there anything more in the book that we did not touch on that you want to get out? Because from what you've shared on it already, I know it's a valuable tool for those people either that are investing currently or trying to get in it. Is there any other little nugget in there, that a little teaser that you want to put out for people for this book?
Yeah, I think for me, the best chapter I think in the book, certainly, chapters 1 through 1 through 10 are great, because it's about real estate and that sort of thing. But the last chapter, when's enough enough?
Yes, this is
That's more
big.
about life, right? And so, for me, I've kind of taken a step back, personally, and said, okay, do I have enough? Like, is this enough? And I've read a lot of articles that there's like Fortune 500 CEOs that are questioning their entire life of like working their tail off, working 50, 60, 70 hours a week and not enjoying the journey. It's taking them to in their 70s to get to the top. And then they're like, you know what? I don't have that much time left. I miss Christmas. I miss my kids' ball games. I miss birthdays. I miss family vacations. And they didn't enjoy the journey. And so, my whole thing is whether you're in real estate, whether you're doing something else, enjoy the journey, right? Because, and that's really what Sorex is really about, my consulting business. And it's all capital for a reason. It's not where you start, it's not where you finish, but it's everything in between. Because if you just focus on X marks the spot, you're going to miss out on so much. And some of this I've learned personally. So when I first got in this business, I wanted 10 units, then 10 went to 20, 20 went to 40, 40 went to 80, and it just continued on to hundreds. And I was never satisfied, right? Because it's like, you know what? Like, I got there. I'm only 35, so I got there. I'm not supposed to be at X marks the spot by 35, right? Like, you're supposed to be there at 50 and 60, because that's kind of what the world tells you. So, the chapter really tells you to compare yourself to your younger self. Don't compare yourself to someone else because everybody's journey is different. But, if you would have told me when I was 25 or 24 before I got in this business that, hey, when you're 35, you'd have a couple hundred rental units and you'd flip houses, loan money, write a book, launch a consulting business, become a pilot. I got my pilot's license and, very successful. Like, would I take it? Would I be satisfied? And if you would have told me when I was 24, I'd been like, hey, I'd probably sign up for that. Like, I'd be good with that. And so the whole point of that chapter is to enjoy the journey. Don't just look at X marks the spot of what your goals are, but enjoy it and figure out why you really want to do what you do. So when I talk to people about, my real estate journey, I don't care about how much money I make. I don't get me wrong, I make 7 figures a year and I'm doing very well, but I do what I do to better my family, better, be able to hang out with friends, do things that are memories that I might not be able to do. And to me, that's what makes you rich, not the dollar sign.
Yeah.
You enjoying life and enjoying those journeys with family and friends and whatever makes you happy. That's what makes you really rich. There's not a dollar sign to put on that. So that's one of the things that I love about the book. I kind of end with that of when's enough to leave people with that question, and to not go look at the world to figure out that answer, because there's a lot of, if you look on social media, I found this out about a year ago that there's some influencers on social media that say they fly private jets like everywhere, all around the world. But there's actually a private jet. There's a video online. You can find this. You can probably find it on Google, where there's influencers that go to a private airstrip. The plane doesn't even work.
I know what you're saying.
They frosted out the windows and they make a bunch of videos for their followers. And so it's like, don't look to social media because social media is kind of fake, right?
It's all glorified. It's all glorified. That's it.
And so look internally, because if you do this business for someone else, you're not going to be happy. Do it for yourself. Do it for whatever your goals are. And that's really what that chapter is about.
Yeah. That reminds me of another book, Psychology of Money. I just finished that one a couple of weeks ago. And when you were talking earlier about how COVID hit, and it was like something like never expected, like stuff was shut down, rates were low. It's now you can never anticipate what the next biggest thing was that we've never gone through, but you could always be prepared for that scenario. Like something that's never happened before is going to happen, right? Like the market crash in 2008, right? COVID, crazy interest rates. Like when you said you had a 7% interest rate on your credit card when you took out that first loan to buy that property, it triggered memory of my dad in like 2000 buying a Grand Prix with 7.8 interest rate. And at the time I was 16, and I was like, why are you paying 8% on a car loan right now? And that's me at 16. And I didn't know really about money. I just thought that that rate was crazy high. And now you got credit cards that are touching 30%. Like it's
Hmm.
ridiculous. So that was a good book. I'm interested in reading your book. I was actually looking it up because my daughter works at Barnes and Noble. I'm gonna see if she can get me a copy of it. And then I like
Two
that
copies.
chapter, like you said, when is enough enough? And it's not so much not about the greed, but when are you settled? When are you satisfied? And like you said, it's about the journey, not the destination at that point. So
Yeah.
That's
I
right.
like
And what that chapter reminds me of two things. One, uh, I know he's a Texas guy and you're a Tar Heel, but McConaughey had a speech and he talks about who his idol is, and his idol is 10 years from me, 10 years from now, me.
yeah.
And then when I get there, it's 10 years. And that I like that philosophy. Like I'm competing with myself. I know what I want to get to. So I'm going to keep myself as my competition. And I'm going to compete against that.
Was that from his
Um,
book, Green Lights?
I'm sure he
I
put it
think it
in his
would have. I
book,
think it
but
was.
it was a speech. I don't know if he won an award for like a movie or if he was trying to do a commencement
I think
speech
I
for a
think yeah.
university. So just that speech alone, like I could listen to Matthew McConaughey and he'd get me fired up. And then the other one was the book, The Next Five Moves. I know he's very active on Instagram and all that, but he doesn't have a chapter, but he does talk about when you get into business, where do you want to go? Do you want to be the multi-billionaire? Do you want to just make 100,000 a year and go with your family? Both of those are okay. You just got to know where you want to go because that's going to set up your next steps. Like, don't push to be a multi-billionaire if you're not going to be happy doing that. Because he talks about himself like that's the route he took, and he's tied to work, and he's always doing events, and he's always talking, he's always pulled away from his family, and that might not be for everybody. So, grasp me up where you want to go as you're starting those LLCs and starting to buy real estate. What's your end game? Like, where's your competition? Where's the 10-year mark of you gonna be at? And be okay with that one. So those are just two things that popped in my head. But yeah, excited to read the book. Um, and then that same company is now doing a giveaway, is what you mentioned before the show.
Yes. So my consulting business, Sorex Consulting, is doing a giveaway where we're allowing people. There's free ways to join. There's ways to get bonus entries by buying merchandise. You can actually buy the Dan, if you want to buy the book, you can actually buy it through the giveaway site, and it gets you entries into the giveaway. Maybe you want to join that as well. But for every dollar you spend, a dollar into the giveaway, and we're going to give away $1,000 a month starting in June through the end of the year. And then one lucky winner, we're going to fly them into North Carolina, and they're going to have a chance of winning $500,000 to go towards real estate. And so just looking to give back, kind of full circle here for me. I wouldn't be where I'm at today if it wasn't for people giving back to me. Now, nobody necessarily gave me money, but certainly they gave me the guidance, they gave me the courage. Yeah. And then certainly banks certainly took a risk on a mid-20s-year-old that didn't make a lot of money. And so I just want to kind of full circle be able to help people. And Sorex is here to help people in whatever way that looks like. There's different things you can buy on the site: apparel, accessories. There's educational things on there. There's a course on there you can buy. The books are on there. It's just a fun way, right? That people can take that leap of faith to get into real estate and to start learning, but also have a chance at winning some money to do it as well. So really looking at that. You can go to sorexconsulting.com or shop.sorexconsulting.com is where the giveaway is. If you go to the regular website, just click on giveaway and it'll take you to the giveaway site. And so really looking forward to how we can kind of shape the future and be able to give back, somebody that might not be able to get in this business any other way.
That's awesome. Yeah, I can't wait to be flown out to North Carolina when I win. It's going to be so good.
You're paying for my half. If you're going, I'm coming with you, even if I don't win. So,
well, we will put the link to that website in the show notes. So if you're listening to the show, buy the book, win money, get your chance to win. You're not going to North Carolina. I'm going to North Carolina. It's already settled. It's in the books. But we'll put the links in there for that. That's a super good giveaway. I can't wait to check out more of your content because it sounds like our mindsets are on the same wavelength, just states away. So it's super impressive to see what you've done. I wish I would have gotten into real estate at the age you started in. You got like a decade head start on me. So It's super, super cool, and I hope it keeps going.
Absolutely. You know, there's a saying in real estate: the best time to buy real estate was 20 years ago, and the second best time is to buy it today. So, you know, because the thing is, we're also gonna, you know, 20 years from now or 10 years from now, we're gonna be saying the same thing, right? You know, prices might be a little high today, but what are they gonna be 10, 15 years from now? So,
Yeah,
it will be interesting.
exactly.
Crazy.
Well, I'm going to be on the boat when we get there in 20 years, so I'll see you on there. I'm
That's
sure.
right.
Cool. Well, we'll enter all that stuff in there. Thanks for giving us the time. We appreciate it. And we'll talk to you soon.
Absolutely. Thank you all so much for having me on.
Awesome.